It's been an unfair crisis, as we're all very aware. There have been sectors that have been left fairly unscathed, and in some cases have actually been beneficiaries of changing behaviours or accelerated trends as a result of the COVID-19 crisis. And then, of course, there have been sectors that have been really very hard hit. Companies in our portfolio like Gamma Communications, like IMI Mobile, like GB Group have been really very resilient. We do have a balanced portfolio, so we do have some exposure to some of those harder hit portfolios. But the key point here is that these are very well capitalized businesses with strong balance sheets. And so we haven't had to sell any businesses because we were being concerned about them getting through this crisis and hopefully emerging in a much stronger competitive position than when they entered. A good example would be Young & Co Brewery. It's a very well capitalized business, 150 million of financial headroom. They predominantly own freehold assets, and it's going to be operating in an environment in a couple of years' time with significantly less capacity and competitors in the marketplace. So we tend to look ahead and through any short-term headwinds and try and establish where this business is going to be in 3 or 4 years' time when we make our investment decisions.
Sadly, unfortunately, clear losers, we would say at the moment. Shoezone and Warpaint, London are two very, very exposed, obviously, to high street and not got good digital presence. Shoezone looks as though it might be starting to adapt. And more recently, we've seen a little bit more positive news on that, but big question marks over actually whether they would even survive. But do you know what? They've been around a long time, so let's hope so. Other one, Lok'nStore, we do wonder on that whether they might struggle a little bit. What's going to be the demand for their kind of space? So it's really interesting on the losing side. On the winning side, obvious ones, anything linked to pharmaceutical at the moment seems to be really popular because you've got all sorts of things going on in the background. So Alliance Pharma is definitely one of those. Really boring ones, actually, probably like smart metering and others who will take advantage of clearly the government's determination to push things through on that side of things. And then you've also got the likes of Alpha FX, the foreign exchange company, because we've absolutely seen foreign exchange dealing and the moves in currency go through the roof, and they certainly look well positioned to benefit from that. So lots of interesting companies around. Sadly, there are going to be inevitable losers, but there's plenty of winners to pick from.
We've had some companies that have been almost quasi-COVID beneficiaries. Not that we meant them to be, but companies like EKF, who manufacture and distribute solutions for haemophilia and for diabetes, they have also taken part in the growth of testing, and they have a testing solution, a COVID testing solution, that has actually meant that their earnings in these next couple of years will more than double. So that's one of the successes. I think some of our companies have been overlooked a little bit because they are quite small, and those companies, we have a bit of a job to do. We've got to make sure that we raise their profile and show the quality of the earnings and the balance sheets within those portfolio companies.
The primary loser for us early stage was Jet2, previously called Dart Group, which is a leisure airline. We hadn't held the shares for that long, and it fell precipitously very, very quickly. Thankfully, we kept hold of it, and we actually added to it on new portfolios, and it's bounced very, very strongly, although still has some way to go. Johnson Service Group is a provider of laundry services for workwear and also for the hotel, restaurant, catering sector. Clearly, part of its business has been really meaningfully impacted. So we got rid of that stock. We didn't want too much exposure to that area. Other losers have been Watkin Jones, a developer of student accommodation, very large developer of student accommodation and build to rent. Again, we still like that business and have been buying it again recently. We think the valuation looks good. Growth profile still intact. Another loser, ironically, has been in the healthcare sector, Advanced Medical Solutions, a provider of wound care and surgical dressings. its business has been hit because there have been less operations. Operations have been postponed. In terms of winners, we've had a nice position in the video gaming sector, so I've done pretty well out of that. Team 17 Group and Codemasters, both publishers of video games. Codemasters recently received a takeover approach from a big US group. We think it's a bit of a lowball offer. We're sticking with it. Other winners have been Dot Digital, provider of omni-channel marketing. Nice business, we've held for a long time. Also, Focusrite has been a fantastic performer. Audio products, music business, done very, very well. And we're sticking with, we're running these winners. We've held these businesses for a long time. They've had this pandemic boost, but we think their growth profiles look pretty good.
We've had a couple of things that have done very well for us as a result of the pandemic. So probably our best performer is a company called Dot Digital. That's actually a provider of marketing software to the online. So essentially, as people have had to work from home and have used more online services, more demand has come for these software companies. The other side of that is also people are stuck at home with less to do. So probably our second best performer is a company called Focusrite, which actually provides equipment and software for people who want to broadcast music on the internet. So essentially they provide the boxes that sit between a computer and a musical instrument and deal with the sound latency issues there. And they've had very, very strong growth. We had one retailer in the form of Jules, which is both a combination of online and offline retail. That's been pretty badly hit. But again, I think that's more down to a combination of macroeconomic events and liquidity, given how much of that business has now gone online. So I think it was prior to the pandemic, it was at 50% online. I think it's now somewhere around 75% online in terms of their business. The businesses we are most interesting is actually a company we have own called Strix, which is a manufacturer of kettle components. So the component that actually stops your kettle from boiling when the water's boiled or when there's no water in it. And they produce that little component, and they're the world market leader in that. And actually it's interesting because back in February, we were probably more worried about the coronavirus impact on that company than any other company in the portfolio. And that's because essentially, despite being a UK or Isle of Man headed business, most of its factories are in China, all its customers, or substantially most of its customers are in China. So therefore we expect it to be very significantly impacted by the pandemic. And it's very interesting, that's actually delivered us quite strong performance this year, but because in actual fact, China has actually managed to recover from the pandemic relatively quickly with smaller amounts of impact on them. And as a result, Strix as a business has actually been able to perform very well. So it's gone from being a business that we were probably worrying about the most in the portfolio in February when coronavirus sort of hoved into view, to being a business which has been not unimpacted, but has been less impacted than many of the businesses that we own, which have exposure in the UK and Europe and North America.
Online gaming companies we've been invested in, such as Team 17 and Sumo Digital, both computer game developers. As people were locked down, they had more time on their hands, and some people got into gaming for the first time, some consume more of it. Some of those new one customers will continue to consume gaming. And a company that we may have been quite concerned about that we held, Hotel Chocolat, it originated from being a mail order company, so they've got good experience in not having stores, so they were able to shift a lot of their operations online. Open Orphan is a healthcare company that runs vaccine trials on human beings. They've been very, very busy, and we actually expect them to continue to be busy, and their services in demand as there's now greater focus on vaccine development. We have held some companies in the construction industry, the likes of Watkin Jones, which builds and manages student accommodation. Clearly, during the first lockdown, there was uncertainty as to whether students would be going back to university. Now, on the whole, they have. And another company, Brickability, which is a brick supplier to major house builders. Again, during the first lockdown, there was great uncertainty and projects were being put on hold. But now, in both those cases, what you're starting to see is their trade has picked up and actually are both are well positioned going into 2021.
Beneficiaries, Begbie's Trainer and FRP, which are two insolvency corporate restructuring practitioners, albeit I would say there's delayed gratification there because they had a good run into it, but they're both off the top quite significantly. And we feel that's because of the various schemes, rightfully so at this juncture, which has maintained a lot of businesses for the time being, but we actually see insolvencies rising a lot next year. So they've done well, but normally they'd be doing a lot better at this point in the cycle. Others that have done well, Tristel or Tristel, high-level disinfectant manufacturers, a proprietary chlorine dioxide formula, which does actually kill the virus. They supply into the NHS and globally as well. DX Group, which are a courier business. Everyone is now having to shop online, especially with lockdown part 2. And they've got spare capacity when many others in the industry don't, so they're actually writing very profitable business. And the last one I'd flag as a winner, Volex, benefiting from data center, whereas everything's going into the cloud. They make the cables that enable that transition, and they also make the high voltage cables for charging the electric cars. The losers are a bit more painful to speak about, but there's definitely been some, as you would expect. That's what a portfolio is for at the end of the day. K3 Capital, which is a kind of corporate finance house that act as a matchmaker between businesses looking to sell themselves and linking them up to buyers. So they rely on transactions, which have been quite low, but they've done a couple of really good acquisitions recently to reduce their cyclicality, and we're really pleased with the way they're looking. Quixent, which makes the hardware and software for gaming machines that you will see on casino floors. So these are now very evolved, almost computer-grade game graphics involved in them. And unsurprisingly, their customers have been feeling the pinch as they have had to shut their floors down to their customers. IG Design, they make the world's largest producer of celebrations products, including gift wrap and crackers. Again, the shop closures have held them back this year. They were kicking on nicely pre-COVID, almost to £8, and they're currently below £4 today. But again, we see a longer-term recovery there. And the last one that's done okay, but it's definitely been affected, is Warpaint London, who make high-quality value makeup. Their main brand there is W7. And again, it's just simply the shop closures. If the shops close, it's very hard to sell the merchandise. But what we like about these guys is now they're increasingly penetrating the supermarkets and the likes of Superdrug and Boots.